everyone, to another edition of Insightful Principles, where my channel is designed to discuss topics around entrepreneurship, personal finance, and macro investing. In today's content, I really want to talk about some strategies that you can implement when it comes to investing within your Roth IRA for beginners. So this definitely is a great video for you if you want to learn why a Roth IRA is essential for you and what exactly it is and how you can be able to allocate your investments. If you can please do me a huge favor, if you can like, subscribe, and share this video, and if you're listening on a podcast, rate, leave a review. It definitely helps. Now, you may ask, what is a Roth IRA and why is it good for me? Well, a Roth IRA is an individual tax advantage retirement account, and it's really for those that expect that they're going to be in a higher tax bracket when they get much older than the one that they're currently in now. So you may have someone that's working a great job, they're making a lot of good income, and they want to try to reduce their tax liability as they get into retirement. So it's definitely a great strategy for that. And if you're a person that's wanting more flexibility when it comes to your investments, more beyond than what you will have in a 401k plan, definitely a Roth IRA is a great option for that. Now, there are some requirements when it comes to making what's called qualified withdrawals. Now, the first requirement is you have to be at least 59 and a half, and you need to have had the account for at least 5 years. Now, when you meet those requirements, you're able to have tax-free withdrawals, and also is tax-free earnings on the growth as well. So that's a great option for investors out there that are wanting to invest in index funds or stocks, and you want to be able to gain all of those earnings. And when you get in your retirement with a Roth IRA, you don't have those big tax implications than you would have with a traditional IRA or with a pre-tax account. So it definitely is a great option for investors when it comes to that. This is supposed to be meant for the long term, so this isn't a short-term account. This account is mainly for those that are wanting to build for the long term, a buy and hold strategy. So if you're an investor that's wanting to pull from it before 59 and a half, then this account may not be the best for you. Now, you do have the option to pull from the principal within your Roth IRA before you turn 59 and a half and not be taxed. Now, the principal is essentially the contributions that you put into the plan. So let's say you have $100 you put into a Roth IRA and it goes up to $150. Well, you can pull from your principal and not be taxed on that amount. But it's definitely important to keep that long-term mindset approach in mind, and also knowing that it's about building for the long term and not wanting to pull from it actively. Now, another positive with a Roth IRA is you can buy or sell different positions and you don't incur the capital gains tax that you would have with an individual brokerage account. So the great thing is you can place trades with different positions, and then you can still, as long as you're holding it into 59 and a half, you're not going to have, those big taxes when it comes to capital gains. So that's another positive. And then also with the Roth IRA, you do have those broader options. So you can invest from everything to gold or silver, stocks, bonds, different commodities. You have a great range of options. With a 401k plan, they kind of only give you maybe 5 to 10 different investment elections, but with a Roth IRA, in some cases you have thousands of different options that you can invest in. So it's just more flexibility when it comes to investing in this type of account. Now, there's two ways that I like to look at investing in a Roth IRA, and those are utilizing growth and value index funds. That's the approach that I have when I'm investing with my own personal portfolio. And the best way to get started is you want to pick an index fund that mirrors the total stock market index. So what I mean by that is you have funds like VTI, the Vanguard Total Index. It mirrors the broader market. You have VOO, which is the Vanguard 500 index, which that is mirroring the S&P 500. So it's looking at some of the top 500 large companies within the U.S. And these are great ways of looking for just growth within your portfolio. Now, I have an example here of one fund that is one that I have been looking at, and one that I also have as well, which is the Fidelity 500 Index Fund. Now, a lot of these other index funds, like the ones that I mentioned with VOO, they typically have a minimum amount that you have to invest. So this one that I'm showing you here now, which is the Fidelity 500 Index, this one doesn't have a requirement. You can invest in it with just the amount, the net asset value of how much it costs to get into the fund. So there isn't a minimum that you have to invest in. Right now, this fund is somewhere around $147.05 per share. If you look at it year to date, it's definitely been down 10%. But if you look at the last 5 to 10 years, 5 years it was up 12%, 10 years it was up 13%. And this is what you would call a large growth fund. And it's more of, it has some great holdings in here. As you can see, you have Apple, Microsoft, Amazon, Google, Tesla, Berkshire Hathaway, you have United Healthcare, Johnson & Johnson. So this is definitely one that is going to mirror a particular sector. It's going to invest at least 80% of its assets in common stocks that are included in the S&P 500. So this is a great one. And then another one that I also, what I look at within my portfolio is you want to search for value as well, because you want to make sure that you're diversified, and even want to look across different sectors. You know, look at some international markets, look at some commodity markets, and just kind of be diversified across the board. But as far as when it comes to value index funds, this one is the Vanguard Russell 1000 value ETF, and what this does is it tracks the performance of just the benchmark index with the Russell 1000, and it's looking at large cap value stocks. So this is a large value fund, and it has some of the similar companies with the other index, but it also has some value companies in there, like, you know, Chevron, JP Morgan Chase, Bank of America, Thermo Fisher Scientific, Verizon Communications. And the top sector here is the financials, is where it is mostly a majority of what the fund is in. And one thing that I always recommend to look at when you are looking at index funds is looking at the composition of what is actually in the index fund, because it's mirroring this particular index and it has a portfolio of stocks in that one fund. So it's always good to go in there and kind of look. As you can see here, it kind of shows the different sector exposure. So you have 19.66% in financials, healthcare 16.58%, and you typically will see that in a value fund, because it's supposed to be more of a defensive fund of investing in an index of products or services that people are going to use regardless of what happens in the economy. So that wraps it up for this video. Hopefully it was valuable for you with getting some more insight on just investing in a Roth IRA, knowing exactly what it is and how to utilize index funds when it comes to building your Roth IRA as well over time. If you all could please like, subscribe, and share this video. Don't forget to hit that notification bell below so you can be notified every week when I drop content. And if you're listening on a podcast, continue to share, rate, leave a review. And I thank you all so much for watching, and take care.